In 2012, clothing and footwear is forecast to grow by 2.4%.
Like the previous 6 quarters, we expect volumes to remain in negative territory throughout the first half of 2012, with signs of a small recovery towards the back end of the year. Sales volumes of clothing and footwear will be kept low due to restricted disposable income and higher retail prices, and this has been caused by inflation. This will limit the quantity of garments that shoppers are able to purchase. Throughout 2012, Verdict expect retailers, particularly those high fashion and value players, will be impacted by low levels of spending from shoppers aged between 16 and 24. And this will be primarily due to low graduate employment levels and increased university fees, putting pressure on their finances and therefore impacting their spending ability. Retailers should start preparing for this shift in shopping habits by improving the loyalty of these shoppers now, which would then encourage them to continue shopping with the retailer throughout the difficult period. Verdict forecasts the clothing and footwear market to grow by 2.4% in 2012, though this will be inflationary driven, with volumes improving by just 0.4%. Though high operational and supply chain costs will remain high in 2012, causing inflation to stick around, we do expect the high levels experienced in 2011 to ease, with overall inflation for the year coming out at 2% rather than the 4.1% seen last year. In an effort to drive footfall, we expect retailers to continue to offer the high levels of markdown we witnessed in Q3 and Q4 in 2011. Though this will drive footfall into stores, it will ultimately impact margins and profitability, and therefore could have an adverse effect on the brand perception if they're not very careful. So overall, we do expect consumer confidence to remain relatively low throughout the year, with shoppers continuing to be cautious with discretionary spending. However, increased visitors to the UK due to the Olympics should provide retailers with an opportunity to raise their global brand awareness, and we do expect to see signs of a gradual recovery towards the back end of 2012.